So welcome to Game Plan Sunday. Today is August 1st, 2021. Had a pretty exciting week in the markets last week. And so what we're going to do is take a look at what took place last week and then what we noticed coming down the pipeline this week, and then try to strategize our game plan coming into this week here based off of all that information. So just taking a look here at the indexes, the performance of the indexes. We had Bitcoin showed up with a strong 25.80%. So Bitcoin came and did its thing finally after, Mother Kathy with her witchcraft and and Elon Musk and Jack Dorsey came together and got some popping off on there. Bitcoin started to rally up to about 40,000. So that was a strong week for Bitcoin last week. Oil rallied back up 2.27%. I don't know if you guys been to the gas stations lately, but I have seen gas popping back higher, getting close to $3 here where I'm at in North Carolina. I've been seeing places in California about $5 for the gas. So that's interesting. So when we pull up the oil charts here later, you guys will take a look at that. So oil is back ticking up here. Gold was up slightly at 0.82%. So that was actually pretty good for gold. Finally, gold is trying to make a move. Gold is just a weird story right now because the story is the Fed. People believe in the Fed instead of believing history. So we'll have to see how all that plays out. But as far as the equities go, we had the Russell. The Russell was at 0.75%. So the RUT was looking better than all the rest. Now, as far as the Dow Jones, they were down 0.36%. The S&P 500 was down 0.37%. And the NASDAQ was down the worst at 1.11%. And then after that, we had the dollar, which also fell 0.88%. So really interesting, especially with the NASDAQ coming down the way it came down. But still, the trend is still continuing. So it's not really a biggie, not just yet. But we will see, these next couple of weeks, what's happening with that. Drilling into the sectors here, what I'll do is just pull up the charts for this here real quick. We'll just pull that up real quick. All right, so we're just gonna go down the sectors here. The best performer last week was the materials sector. And you guys can see materials is actually looking pretty good up in here. Had this nice decline. Try to hold this floor right here, the floor right there. Had a breach that shook out the weak hands. Y'all know how we talk in the game, you know what I'm saying? You had on weak pussy ass hands, you got to have those diamond hands. And so the market will catch you if you got the weak hands, and then it'll rip up on you like that once you get out. You get that buy trigger. And anyway, so materials had a nice, little rally coming up into last week. That's the material sector. We also had the energy sector that was also rallied back up into a key level of resistance. So same kind of thing here, hit that support line. You guys can see support right there. It breached, shook out the weak hands, came back up, and it's still here up against that resistance. I don't actually think that we will blow past this resistance. Typically, you see these kind of patterns like this, they kind of do this kind of move. Boom, come back up, boom. That's what typically happens with that. So I'm expecting, it don't mean it's going to happen, but I'm expecting this resistance line to hold steady here, and for that to the energy to come down some more. So we'll have to see, because oil, on the other hand, is looking like it's actually rising. So the finances, the financials are actually looking pretty good here. Just bring this up just a tad bit more. We can see at the 100 moving average floor support level, it held true to the game. You feel me? Bounced to that 618 retracement, came back down, touched that 618 retracement again. That's how we know that as a key level of resistance. Boom, came off the 100 floor. We got a buy trigger that's right here. We are in the squeeze, so that's interesting. Trend is moving upwards as well. But the key thing on this is, can it breach that 618? So it's going to be interesting to see that. I would like to see how the financial stocks are shaping up right now. Haven't had a chance to take a look at them, but maybe you guys, Ron and everybody, see if you can find some plays in there. Looking interesting though, but this may just chop around in here for anything, But I'm more neutral to bullish on that versus bearish. All right. And then as far as the healthcare is up, extended. Okay. It's melting away. It is just floating to the top. You guys can see with the healthcare out of bounds, right? Boom. Overbought. Okay. I don't even have any fib levels here. It's just, continue to float up higher. And as you guys can see, it gets in these Goldilocks periods where it can get real crazy with drifting upwards more and more. The whole healthcare situation with this whole Delta situation pop off has the markets by the balls pretty much. And so, I don't expect for a sell off in healthcare. I expect for this trend to continue as long as that whole Delta thing is popping off, unless the air pops out of that. But healthcare, I believe, is going to, benefit healthcare and biotech stocks. We'll see. As far as the utilities came in, 0.40% here. Nice little gain. As you guys can see, the 786 is the 786 retracement here. It's key level of resistance. We're back up against that. You guys can see we hit up here that time. We hit up here that time. Held true to the 200 floor, so we already know what the floor is, okay? Then we came back up close to it. Boom, rejected again, but not quite. We haven't broken through the 8 moving average, so still holding. We have to see if the price continues. If the market continues to move up, I would expect for utilities to come down, all right? But if fear should come back into the markets, then we can see utilities come back up, as utilities is a flight to safety type of play. It's a proxy to like what you see with bonds. Okay, so more of a safe haven kind of situation. Real estate came in at 0.22%. So the real estate sector, you guys can see at the 1272 extension, right up here, we kind of drifted here from here to there. Actually, this is the 1618, excuse me, where we are right now. So we cleared this, and now we're at this level here. And this is actually starting to look like a hard resistance zone here. So it's going to be interesting to see if it can pierce through. I'm not seeing any signs that it will. Housing is looking very interesting. In fact, we had some housing numbers came out this week, which are actually pretty weak. We're starting to see that, basically the prices of homes are too expensive. We're seeing a little rejection in prices. It might not just be like rejection of prices. It may just be qualifications where people are just not qualifying for these homes, these expensive homes. And the new builds and stuff like that are too expensive. The cost of labor, the cost of materials. So anyway, not so optimistic on homes. The other factor of homes is that you have interest rates are continue to go down lower. So the that may help with people trying to go ahead and buy to take advantage of those rates. But again, that's your whole parity there. You got, you want to take advantage of low rates, but you're going to overpay for a house. It's kind of a tricky kind of situation. It's not really a right or a wrong situation. It's just a risk that you have to consider, that you're overpaying for the homes. And as I was mentioning in the prior weeks, we've been seeing Zillow buying homes from people. I got some clients out there that's, saying Zillow is buying houses from cash money well over the bid. So that's pricing the little guy out of being able to buy homes. So regular people are not able to compete in this market right now. Price is too high. And, so let's see how that all shapes out in the real estate sector. What else we got here? Let's take a look at the consumer staples. So consumer staples, again, chopping up against this level right here. Okay, you guys can see this level right across. All right, so many times at the time that we have tested this level. Okay, so we already know what that level is. Came back again. We're trying to still pierce through, but we haven't quite cleared it yet. So just have to see if we get a breakout beyond the zone. This could, be something like this. Boom. It could do that, or it could pierce through. Right now, we're at that resistance level. So that just lets you know to approach with caution. Okay. Can't be too bullheaded in that. That's a a strong resistance level. All right, so consumer staples, industrials were down, tech was down, communications was down, and discretionary was down. I do want to take a look at, let's take a look at communications real quick. All right, so communications still drifting up, so the trend is still intact overall. We got a little resistance here. You guys can see the 50 is key here on this chart here, that 50 moving average. That floor, it continues to bounce, 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 boom, shook them weak hands out, bounced. All right, and that was a short little rally, came up into the 127, and now it's starting to drift downwards. It's, you know, falling underneath the 8 moving average, so it's going to be interesting to see if that holds to be true. But again, you can count on the 50 being able to catch this bad boy. All right. And let's see, tech. All right, so here we go with tech. The trend is still intact. You guys can see, bingo, trend is still intact. We are, you know, again, extended here, not by much. So again, this can continue to drift higher. You know, we can continue to see this drift higher. It could go lower, but as you guys can see in the past, it get those Goldilocks periods, tech can just continue to go. And in fact, tech is pretty much what's driving the markets anyway. So the markets be crazy, tech is still good. You know, so not betting against tech, not yet. All right, not betting against tech, not yet. Although Amazon got smacked up, and we'll talk about that in a second here. I don't know if y'all caught that, y'all saw that falling knife on Amazon. Anybody catch that knife? You probably wouldn't be here to tell us if you did, huh? That was Michael Myers style with it. Yeah. All right. Consumer discretionary had felt worse. And you had a negative 1.55%. Again, rejection up against these resistance zones up here. Okay. Yeah, that boom, bing, bow, looking kind of like that. Overall, things are still dicey, choppy looking in the overall markets. And I think that, you know, when we take a look at, you know, what's driving the markets these days, all the news things that we have that's popping right now, the key talk has always been inflation. We've been talking about this whole inflation situation for, this whole entire year. But the thing is that, you know, we have history, which is a great teacher, and I try to give you guys the history and stuff like that. But the past is no indication of the future, though, or the present. But we get a lot of clues from that information so that we can make our analysis and our hypothesis on, you know, how everything is going to pop off. But everything that we pretty much been talking about has been, you know, coming true. We've been talking about this inflation thing when nobody was talking about inflation. You guys have already been schooled on inflation. Now it's all over the news, so now everybody and their mom can tell you, you know, about inflation now, but we've been on it. But anyway, we're seeing more and more information in the headlines about this whole inflation situation. On the counter, on the backstop of this, you have the feds that's saying, oh, it's transitory. Oh, it's just going to blow over. It's just a temporary situation. Don't even worry about it. We're good to go, right? So that's what the whole story is. We actually have Fed Powell that spoke this week, so we'll go over that. But I just want to show you guys a couple of headlines that's in our news feed, right here at Wallstreet Jackboyz. And again, if you're not a member, make sure you become a member. Membership is free. If you want the training, you will pay for that. But other than that, you can enjoy all these other great amenities that we have here, including our live 24/7 chat room. Y'all like that plug, don't you? I like that plug. Boom. All right, so cool. So Lysol make a record warns about inflation, what it means for P&G and PepsiCo. Again, check this out. It's on the headline. And again, you can like this stuff just like how you do on Facebook, on our website. Ain't that cool? That's how we living over here. You feel me? Anyway, so that's more inflationary. This is Terry coming through. Stocks making the biggest move pre-market. McDonald's, Boeing, Pfizer, Spotify, more. So earnings has been actually pretty good, but the market is not really reflecting all this earnings stuff. A lot of the hype that's in the earnings, everybody understand in the market that those expectations to continue is going to be far lower for them to continue to deliver all this value. It's all fake. It's all, you know, because of the Fed's intervention and distortion in the markets that's been causing these companies to have all these great, you know, earnings. But that is going to come to an end. All right. So here we go. Shrinkflation, inflation, sneaky cousin is on the rise. You guys can check this article out. A lot of you guys are old enough and a little more mature than, some of those little Robinhood traders out there. But what we like to do at Wallstreet Jackboyz is we like to take a look at all the phenomena that we're observing in the markets, and we like to see it take place in real life and reality. Okay. And when you connect the two, it's like, yeah, that makes sense. Like it's real. So this whole shrinkflation situation, you guys can see, some of you guys may know about it or not. But basically, instead of producers passing costs on to consumers in the way of prices, meaning raise the prices up on the goods and services that you're exchanging your currencies for, they have a sneaky way of doing the same thing, getting the same kind of results by shrinking the amount of goods or services that you get. The price is still the same, but the content is not the same. You feel me? It's like, in the streets, they talking about cutting up the work. So they're putting cut on the work right now. They're cutting the work, basically. You know what I'm saying? So you're getting a bunch of baking soda, you ain't getting the whole work. You feel me? So that's how they living right now. So the shrinkflation situation, this is a whole problem that we have with indexes and all these numbers. People are so number driven. And I tell people all the time, listen, numbers don't make anything real. Okay. Somebody tell you a number, but they don't match your real observation. You have to question the numbers. Okay. So, again, they have all kind of ways of manipulating these numbers. And I'm a guy who has a data science certification. I can tell you it's all kind of ways to manipulate numbers. It's freaking crazy. So anyway, so that's cool. And that's all I put in there. Financial engineering at its best. Most people do not understand this type of stuff. All right. So we had some employment and unemployment numbers. Same scenario. I'm going to skip that because I know we're short on time here. But you guys can check these out. Again, you go to the charts and everything posted. Business employment dynamics. You guys can see that. The FOMC statement, again, we post all the stuff on the website when it's live. So you guys can read what the FOMC said, what the feds are saying. And then we had the press conference and everything. Here we go right here. Fed Chair Jerome Powell, FOMC minute statement meeting. You guys can watch the videos right here on the website. If you didn't see it, you can hear from Fed Powell's mouth yourself. And basically, it's the same track, same track that's telling people that inflation is transitory. That's it. Nothing has changed about this. The market is expecting for the feds to taper because inflation is too hot. But what they want to see is the way they measure inflation at 2% over time. And right now, inflation is like over almost 6%. It's like well over 2%. So you can't even ignore it. So they're not even ignoring it anymore. At first, they was ignoring it. It was like, oh, it's no inflation. Then inflation it's transitory. And so then the statement is that, well, it's extending a little longer than what we thought, but it's still transitory. Okay. So all of this is impacting the markets in real time, you guys. So you guys can check it out. There's a quick little article also tells you about bonds here. While rates low despite the Fed announcement taking another step toward tapering, it's a tricky question, actually. True, the Fed did tweak some verbiage to grease the skids for tapering, lying, but that was widely expected. During the press conference, Powell did a good job of managing market expectations. No, he did a good job at lying. Traders basically knew that confirmation combined with uncertainty created the rapidly changing pandemic landscape was more than enough to keep rates on a friendly course. So rates stay low, as I was showing you guys. You guys can see even the mortgage rates over here. They're still low, 2.84% for the 30-year fix. Right here on the website, you guys can check it out daily. So when you see lower rates, this is supposed to incentivize people to go take out more debt because it's low, but again, we talked about that parity earlier. So anyhow, so what else we have here in the headlines? Homeownership rates fall across the board. You guys can see that. It was at 65.4% in the second quarter of 2021. And this is down from both the previous quarters of 65.6% and a year earlier when it was reported at 67.9%. So we're starting to see, home ownership rates starting to fall a little bit. You guys can check this out. Let's see at the end here. Let's see, the vacancy rate for rental property in second quarter was 0.5 points higher than a year earlier at 6.2%, while the homeowner vacancy rate was flat at 0.9%. The median asking rent for vacant units was $1,228 per month, while the median asking price for sale of vacant units was $238,000. Really nothing extra here other than what I told you guys earlier. Here's when the eviction ban, foreclosure moratorium, and other COVID consumer protections expire. Now, I don't know if you guys can see on our events calendar up here. You guys can check out this calendar on the side here. This is here, plastered on the website. You want to know what's coming down the pipeline, you can always see here. It shows you the most recent, well, the events that's coming up soon in that kind of order. But if you go to view calendar here, or you go to events here, you can see the full calendar to see what's coming up. So this whole eviction moratorium, we had this here in the calendar so you guys can be aware of it. That actually ended yesterday. And that's a big talk here. In fact, what I'll do is I'll just go fast forward up here. We have so much to talk about here. It's crazy. I might not be able to get through it all, but you guys can check this out. The federal eviction protections have ended, leaving renters scrambling. Okay. Federal eviction protections have ended. Let's actually go through some of this real quick. Okay, it's August 1st and rent is due. That's a big change for America, a big change for Americans, many Americans who had been unable to pay rent, but were protected from eviction by a federal moratorium. Now those protections are gone. All right, so again, you guys can check this out here. Trying to skip through, find the other juice in here. Okay, it's about relief money. All right, let me just go down here. All right, so the end of the moratorium potentially means money in landlords' pockets, but there are still roadblocks. California is allowing landlords to get paid what they are owed from previous months without rent, only if they waived 20% of the back rent. And some landlords have taken such a hit that they will be forced to sell their property, eliminating the opportunity to continue renting as a future source of income. All right, so this is a tricky story. Okay, tricky story. For those who are highly in tune with their morals, the fallacy of the moralists, okay, is that everybody wants to do good. That's just the way we are. I want everybody to do good. But when it comes in terms of economic events, economic phenomena, you have to approach it with an economic lens. You cannot use a spiritual church, pastoral type of, view when you're talking about things that are, governed by economic phenomena. So that's a lot of problems here. So on one end, it looks really bad. And yes, it is for a lot of people. This whole thing, and again, that everybody's expecting. I wasn't expecting for Biden and them to let this go. I'm like, the Democrats, they always gonna come through, right? But they didn't. And now, they're on vacation. So we'll see. I still think they're gonna come through. I don't think they're going to let it happen because, again, you're talking about millions of people that would be kicked out on the streets. That's crazy, right? That's freaking crazy. So my prayers go out to all those people in this situation. At the end of the day, it's a coin that has a heads and a tails to it, okay? So you have all these, people, landlords out there who have their properties. They have not been able to collect any monies off of the property that they owe on, okay, since this whole pandemic. So what do you think is happening with them, right? They're hurt and they're having to come out their personal accounts to cover all of this stuff, or they're not. Maybe they don't have it. A lot of, landlords, they depend on this income that they get, okay? And when that comes to an end, it puts them under financial strain. So on one end, you have, people that's crying. You probably see a whole bunch of sad sob stories all over the news, and they are true. It's really sad. And on the other end, you're going to see some people that's like, yes, I can finally get the hell out of my house, okay? Because there are so many other buyers that are looking to get into these homes, or renters are trying to find homes, and they've been having a hard time finding homes, okay? So it's one of those things where I don't approach it with a moral point of view of good or bad. I have to approach it with an economic lens. Some people may say it's cruel. This is the way that the world works, though, so you can't ignore that. I do have sympathy for those who will be facing these evictions. So you have the rent moratoriums, you got the mortgage moratoriums, all of that stuff coming to an end. But what this actually means as a benefit to those people who have been looking for homes and they have not been able to get into a home because they've been outbidded by Zillow and BlackRock because we had less than 2.5 months of inventory. Last time I checked, it could be more now. We had not enough inventory on the market for people to buy. So supply and demand. So you get all this bidding the prices up, and it bids people out from being able to, buy houses. So when you get this, and again, that's because all the distortion in the markets through the government intervention prevented the natural flow of the economy. And so with them removing the restriction, okay, then it's allowed landlords to do what they need to do to get somebody in there, okay? And so, or also those people that's trying to buy, it gives them better opportunity with more inventory flooding the markets. So this should have lots of inventory flooding the markets. This should bring prices of homes down. So you have a lot of people that's, paying way over the bid than they should be because they're trying to get a home, okay? And that should be easier should this whole thing take place for new buyers who have been doing their best with saving money, accumulating money to save so they can purchase a home. They have their good credit and things like that. They have been on the sidelines trying to get in homes. People have been dropping out of the homes. What we saw in the data earlier, they've been dropping out of buying homes because it's too crazy. But now this should give them another leg up to be able to get, some homes at a good price. If this inventory floods the market, again, that's depending on if they allow the regulation to be removed. We're here yet to see. Popcorn is ready. But I know they're pushing right now, like in real time, trying to find ways to get this thing good. So anyway, my heart goes out to anybody that's facing that. There are some resources in this article that will help those out with getting necessary help that you need. So you guys can check that out. But yeah, sad time here. All right. So with the eviction moratorium situation pop off, let's take a look at the labor shortage is worse than it looks and help is not on the way. You guys can check this out. In some of these articles we post, yeah, he may have to pay for them. I'm not too sure if they allow you to read them from some of these sites. I have membership with some of them. So, but this is an interesting article that's telling you guys about the labor shortage. And this is back about the inflation situation I was telling you about earlier, where inflation is not transitory. Bill Ackman, he was saying himself that once employers pay higher wages, they don't take that back. And that's what his whole logical conclusion was, that inflation is not transitory. I watched the interview with Mohammed what's his name, El Ryan, the mainstream economist. He said the same thing on CNBC and Yahoo and all of that. He was saying the same thing, that inflation is not transitory. He don't believe that it's transitory because of the wages going up. Okay. And he said he would like to see more data if it is, and he'll change his mind. But as of right now, he's not. So what's interesting is I posted this on the website for you guys to check out. And again, this is, old school homework I be doing. I be telling you all about it. You feel me? Ray Dalio's work. And you guys can see this, okay? The spiral from a more transitory inflationary depression to hyperinflation. All right, notes and everything highlighted in that. I just wanted to cover that 1 second here because, again, it's on the website. And in fact, what I'll do is show you guys how to use the site. Some of you probably don't know how to do it. But if you're doing homework like I do homework, I kind of built the site so that you can do that. So you guys can see this thing right here that says search speed. You guys can go in there and type in certain things that you're looking for. So I'm going to just go in here and just type in to see if I can get it to pull up here. Just to show you guys can check out this work itself. You guys can see right here, the spiral from a more transitory inflationary depression to hyperinflation. All right, let's go to read more. And it's going to take us to the Legends and Gurus page, because Ray Dalio is one of the Legends and Gurus. So it's going to take us there where you guys can actually go and get all this intel right on the site. You can do your homework. It's not me that's saying it. We're talking about the Legends and Gurus, okay? So you'll be able to go down here and you can find it. So here you go right here. The spiral from a more transitory inflationary depression to hyperinflation, all right? He tells you how it all plays out. Boom, you can see, all right? He tells you how it all plays out. And again, I'm gonna allow you guys to actually go in here and read it yourself so that you can get caught up on all of this. What I want to do is actually go down. I'm gonna just go to the conclusion here. I'll let you guys do the rest. All right. So he says that, all right. In addition to causing an economic contraction, hyperinflation wipes out financial wealth as financial assets fail to keep pace with currency depreciation and inflation. Hyperinflation also causes extreme wealth redistributions, Lenders see their wealth get inflated away, as do debtors' liabilities. Economic contraction, extreme wealth redistributions, and chaos create political tensions and clashes. Frequently, public servants like police officers go on strike. That says goon strike. Should be go on strike because they don't want to work for worthless paper money. Disorder, crime, looting, and violence typically reach their peak during this phase. In Weimar Germany, the government had to respond to the disorder by issuing a state of siege, granting military authorities great power over domestic policies, such as carrying out arrests and breaking up demonstrations. So he's telling you guys, chaos is what happens in all of this, and the poop hasn't hit the fan yet here. Did you guys see? Hollywood don't be lying, man. Hollywood be telling y'all things coming in the event. You see all these purge movies and stuff they keep dropping. They're giving you clues, man. You saw the movie Joker. You saw what happened and all of that. It's chaos. And they're trying to prevent that. That's why they have this unemployment goal. The Feds have this 2%, this unemployment goal that they're trying to keep there because they know without that chaos, they get overthrown. Revolutions are born from all of this, okay? So it is very pessimistic. But here goes some good news for you guys. He says, investing during a hyperinflation has a few basic principles. Get short the currency, short the dollar. That's what he says. Do whatever you can to get your money out of the country. Get the hell out of that country, okay? All right. Now, that's interesting because that's what people typically do. But see, you got the Feds, you got Janet Yellen and them. They're trying to, counter these things. They know it. Listen, they're not fools. That's why they got this global tax that they're trying to pass, because they know capital flight is going to be taking place when they start having all these unfriendly entrepreneurial policies that they're passing. People got to get the hell up out of here. They know this, okay? We just don't know this, so I'm giving y'all the game, but guess what? They know this, all right? It's written. And it's interesting. An old school dude told me back in the day when I was young dude in the streets, he said, if they put it in the book, he said, and again, there's no offense to nobody, but this is from me coming from black communities. He said, if the white man was going to do anything, they put it in the book, the black man would never know. And I was like, what do you mean? He said, y'all boys don't read. And I was like, what? And he said, you don't read it. So if they was going to do anything, they'll put it in the book, and you can't say that they ain't tell you. You just didn't read. You feel me? And here I am. I'm reading to you guys straight from a book. Okay. All right. All the stuff that we're seeing on the news and stuff, this stuff has been written long ago. Okay. And even before that, because Ray Dalio, he's, that's my dude. I like Ray Dalio. He's still a bit of a socialist. He's an interventionist, excuse me. But he didn't create all of this stuff. He studied it. Okay. This is a book that I'm actually reading right now. It's called Theory of Money and Credit by, Ludwig von Mises. And they call this guy Mises Christ. He knows a lot. You guys can see I'm studying hardcore. But this guy is the one who basically discovered the whole debt cycles, the boom and bust cycles and all of that. And from his studies, going to a lot of things that we're seeing now. We're seeing the invention of cryptocurrencies. We're seeing central bank digital currencies. We're seeing a lot of those things. It's not different. It's just a different mediums that they're using now. But history has this weird way of repeating itself. So again, that's why I was saying we can learn a lot. That's why I stay in the state of studying. When I'm not teaching, I'm studying. All right. So I'm still learning. But anyway, back to this. He says, do whatever you can to get your money out of the country, buy commodities, and invest in commodity industries like gold, coal, and metals. All right. This is what he's telling you. Buy commodities and invest in commodity industries like gold, coal, and metals. All right. So what does it mean? Like I tell people all the time, people don't value money. What it is that you want are goods and services, okay? So the goods and services, you get those things from the commodities. You feel me? There's no goods and services that you can get from cryptocurrency. You can't eat a cryptocurrency. Like it's just all purely speculative. It does not add to the GDP of the nation. So how do you know how rich a nation is? It's based off of its GDP. What are you producing? The goods and services that you're producing. Once you get into periods where people are purely speculating, this same stuff happened in Weimar Germany, or whatever you want to call it, right? So in Germany, it happened in the same stuff. It was just with different, tools, right? Different mediums. The same stuff is happening, okay? Anyhow, he says that buying equities is a mixed bag, Investing in the stock market becomes a losing proposition as inflation transitions, transitory, to hyperinflation. Feel me? It's already written. Instead of there being a high correlation between the exchange rate and the prices of shares, there's an increasing divergence between share prices and the exchange rate. So during this time, gold becomes the preferred asset to hold. Shares are a disaster, even though they rise in local currency, and bonds are wiped out. Okay, so what did Ray Dalio say in this? Gold becomes the preferred asset to hold. Now, you guys can go in his profile here in the Legends of Gurus. He has a whole lot more work that's in there. You guys can check out where he takes the currencies over like 5,000 years and how they have these cycles where they go from gold, hard assets, and they start to experiment with paper assets and stuff like that. But then they always go back to gold. Always got to go back to the hard assets. So he says, once an inflationary deleveraging spirals into hyperinflation, the currency never recovers its status as a storehold of wealth. Creating a new currency with a very hard backing while phasing out the old currency is the classic path that countries follow in order to end inflationary deleveraging. Okay, so pay attention to what he says. The currency never recovers its status as a storehold of wealth. Now, what's interesting, you got a lot of people that's kind of dismissing it because the dollar, we got the world reserve currency status, and we really don't have no competition. Although China is, they're moving up. Okay, but another interesting thing he says, creating a new currency. Creating a new currency. What do you see on the news all day, every day? When you go to YouTube, when you guys watch this video on replay, it's probably going to be a freaking commercial ahead of it. They're going to say, Bitcoin. Okay, they're pumping the hell out of new currencies. All right, this is what they're trying to get going. This is the path forward. There's going to be some kind of new currency. Whether it be central bank digital currencies is another question, or would it be cryptocurrencies? So we're seeing that happen here. But what's interesting, he said, not just creating a new currency, he says creating a new currency with a very hard backing. Creating a currency with a very hard backing. Okay, hard backing, that is gold or silver. It has to be a real commodity, a real asset. Okay, everything that we're seeing now is fiat. It's not backed by anything. Even if it's Bitcoin, it's still not backed by anything. Like it's not backed by anything real. It's got to be backed by a real asset because that is the genesis of all values and prices. Is gold. Okay, it's the genesis. So everything starts from there. It's got to serve as something that people want and need without monetary value, like without it being a currency, right? People would use it because goods and services. So again, you don't actually need any kind of crypto to do anything that you need to do already. Money is already digital, okay? People use swipe your credit cards and stuff. So again, what is it that's so important about this whole digital money stuff, right? And I've been telling you guys about this. The whole situation went the artificial world and natural world. In the natural world, the government can't control everything, okay? So in the natural world, you have dollars and gold and silver, okay? You can hide that. They can't detect that, okay? You can make transactions in those things, and they don't like that. They want for things to be digital because everything will be tracked. That gives them totalitarian control, okay? And especially when they issue out this new digital dollar, which Powell, he's been talking about it. They're working on it. In fact, we had an article here on the website from MIT that's helping them to build this digital currency, okay? And China already has theirs out. But they were able to track everything from everybody, and they could control who gets what, how they get what. In fact, there's an article that even Topaz posted on the website. I'm going to go back to the newsfeed to check out, but you guys can check that out. It's a good article. I actually read it. And it's actually defending the whole digital payment situation where they're trying to get the governments to, here we go, a Fed issued digital dollar could print money for the people. And this guy here, he's, sympathetic about this whole digital currency stuff. He's, positive about it. I am not positive about it. And it's because it's the end of freedom. Okay. When it's go digital, you're plugged into the Matrix. Go back and watch the movie Matrix, man. I'm telling you guys, this is the truth, man. Everything will be tracked and traced. You cannot escape, cannot leave, you cannot go. You will be slave. We all will be. So that's my issue with anything digital money. I don't care if it's crypto. I don't care if it's central bank dollars. I'd rather crypto than central bank dollars. But This is the danger that nobody's talking about. Everybody's so, so optimistic about it. But what you don't see is that, you don't have any autonomy anymore, and they can control it. And I told you guys before about Mark Cuban talking about it, how they can force people to spend money where they want to. And then if you don't, then they will punish you by taking the money away. So they give you like a stimulus and you got 3 days to spend it. And if you don't spend it, they'll take the money back. And so these people here, they continuously try to come up with financial schemes instead of doing the right thing. Why is it so hard for men to do the right thing? Okay. We continue to try to get better with our lives. It's kind of like my boys in the hood. They go to prison. Prison don't help them. They become better criminals. You feel me? They figure out how to do things better. They figure out how to get the drugs in. And I got people in them. They got cell phones. They all, they figure it out. They just become better criminals. That's what's happening in our financial situation. We talk about the Wall Street Jackboyz. These are the real Wall Street Jackboyz. They continue this financial engineering instead of doing the right thing. Okay, instead of letting the economy deflate and everything recycles. Okay, it's same thing like in nature. Things recycle. Okay. I was traveling. I saw a whole forest that was burnt down. And I was like, oh, this is crazy. But no, they did that on purpose because they're going to grow some new trees. Okay. So the boom and bust, like if the feds and it wasn't involved, you wouldn't have such a hard problem. In fact, there was Great Depressions before, like the Great Depression in 1920. You never heard of it. But the government didn't do anything. And we came out of that in I think less than 6 months. Okay. So people say, oh, well, the government, they got to do something. No, they actually don't have to. It is the fact that because they keep doing shit, they keep on fucking shit up for everybody else. They're making it worse. They're continuously trying to figure out how to kick the can down the road to your kids and your grandkids. You feel me? Take a look at all of us, all you young people and your grandparents had much better life than yours, much more wealth than you had. In the baby boomer period, the FDR years, all the inflationary policies and stuff, kicking the can down the road, we're all paying for it now. That's why your university, colleges and stuff, I got college kids, so college is expensive. The cost of college is crazy. You got people that's crying about health care and all that stuff. If you get the government out of the way, the economy would do what it needs to do to balance out naturally. But no, they don't want that to happen. They got to keep on intervening, and it's constantly causing pain. Okay. So this is the problem. These are the things that I'll continue to talk to you guys about. That's what we talk about in Austrian economics. Okay. All this stuff has been written. Remember that. What's up, Jill? How you doing? Thanks for joining us. All right. So anyhow, I know we kind of went over a lot here. I didn't quite get over everything, but everything is in the news feed. You guys can check all of that out in the news feed. Check it out. I did want to go over earnings coming up. Topaz blessed us with this update this week. And as Terry posted over here in the comments, another busy week of earnings. All right. So let's see what we got in the pipeline. I think Monday is going to be pretty light. These are not really no big names in there. Ferrari, these names are pretty light. So NXP, Monday is not going to be a big day for earnings. Let's see what Tuesday has. Alibaba. Okay. Well, the whole Chinese situation is very interesting. So you remember I've been telling you guys about this whole goods and services stuff. Where do all your goods and services come from? Right? This is what happened. America used to be the producer of the world. We used to be a manufacturing powerhouse. The middle class was powered by manufacturing jobs. Okay. Well, all this financial engineering, the Keynesian economists, guiding, public policy and stuff, they figured out ways to financially engineer this thing where we could actually import cheaper goods into this country so that people could spend more, so that we can grow the GDP from more spending. And so this actually empowered China. Okay. While we empowered China, we destroyed the middle class. We destroyed manufacturing jobs. In fact, there's lots of research recently. I think in 2018, Pew Research did some stuff, and it was talking about the marriage rates. A lot of people don't even understand how all these things have something to do with your life. How the divorce rates are skyrocketing and marriage rates are very low. And they did the survey, and it was saying that men were saying how they don't make the same money that they used to make. Meanwhile, the women are making more money. You got to understand that transition from women not working to working has consequences. I know women like to be independent. There's nothing wrong with it. It's not a right or a wrong. It's just the observation of reward and consequence, right? So when you had back in the day, one man, he could feed a family of 10. You remember all those people used to have big families, you know? My pastor, John F. he has a huge family. I think like 10, 12 brothers, right? And sisters. Huge. One man working, take care of the whole family. Well, inflation, that's all we've been doing is covering up all the stuff, wrapping cat poo and dog poo, and putting it back out there, kicking the can down the road until you see this inflation coming. Now, a man can't take care of a family of 10, not by himself. So it brings the woman out. The woman has to work. So while the woman is working and the man is working, who's taking care of the kids? You see? So kids are getting less time of development, okay? Everything has these consequences and rewards. So it's just an observation of what's happening with that. But at the Pew Research data that was saying that how most men like to work with their hands. Most men do not like to serve. You know, it's not in their nature. And I don't think women like to serve. They just do a better job at it than men do, right? You know, when you call and talk to somebody customer service, you want to talk to me. I sound too hood, right? You want to talk to Jill. You want to talk to Reese over here. They got the nice voices and all that, you know? So America has transitioned from a producer economy to a service economy. And this is the demise of the great empire. Meanwhile, China is rising because they produce the goods and services for everybody. You see how that all works? All this stuff started in the 1930s under FDR. You feel me? So, and now you got the income tax that came from that as well. You have World War II. All of that is impacting us to this day. You didn't have an income tax before then. Now you got the income tax, and we're still paying for World War II. Nobody even wanted to do all that. Anyway, I'll talk y'all head off about that. Anyway, so let me get back to the earnings, though. I just wanted to let you know how the dynamics work, because China is now coming down on their own companies. And I'm going to talk about Alibaba here in the earnings situation, but this has been in the news for the past 3 weeks, and it's going to continue as China put pressure on its own companies. We saw major sell-offs in these Chinese companies because they are laying the hammer down on them, and it's kind of nonsensical because it's like, why would you hurt your companies that's producing all this value? Well, those companies, they depend on, a lot of them are dependent on American dollars for us to consume them. And so this is this huge chess game that America and U.S. is playing. And as we start to uncover more of that, we start to really figure out, like, what is this whole aim of punishing your own companies? You know, China has this agenda now. And again, this is why you don't want communism, because for years they prevented people from being able to give birth. Okay, the one child policy over in China. I mean, mind you, they got billions of people, but resources are scarce. That's what we learn in economics. That's why we can't just print all the money in the world. People don't understand there's consequences behind all of this. Okay, so they had this one child rule. That's right, Jill. So they're trying to change now because they're trying to get people to procreate more. Right. So now they are allowing their people. Ain't that some shit where your government allows you how many kids you can have? This is why it's great to be in America. You feel me? Nobody tell you how many kids you can have. That's your freedom. You feel me? But over in China, they are allowing them to have up to 3 kids now. Right. Because they seen that population decline. They probably done killed a lot of people off with this COVID crap. Right. So now they need people to start, producing more. OK, so they're doing all this policy stuff that's supposed to be in the name of having a bigger population. Anyway, so that's really interesting because to me, it don't even make any sense, that you would punish these companies for doing so. You got these companies out here teaching people, training people, giving them educational skills so they can get this money. And the government don't like that. Furthermore, China's also coming down heavy on cryptocurrency, super heavy. And China, they lead the way, man. They don't have as much regulation. So the beautiful thing about China is this. And Milton Friedman did a whole series called Free to Choose. I think this was back in like the 80s. You guys can check it out on YouTube. Free to Choose. Milton Friedman is arguably one of the greatest economists to ever live, from the Chicago School of Economics. He actually studied under my professor, Ludwig von Mises, as well, with the Austrian school. That's where they come from. But anyway, he did this thing where he was showing the beauty of China. And China was so premature, but he was showing how China didn't have a lot of rules and regulations that were free. So business was coming there to do business. It was business friendly. You can't get growth without production. So you got to have economically friendly policies for entrepreneurs so they can do their thing. And so, again, people talk junk about China not having regulations, this, that, and the third. but most of the stuff that you actually have is made in China. I mean, like this, I don't even know what this is, but this is probably made in China. It probably have an American company label on it, but you can probably get the same thing from Alibaba, who's getting ready to have their earnings on Tuesday. You probably get the same thing from Alibaba for a fraction of the price. Somebody can look it up right now. Look up highlighters on Alibaba.com website. You probably get these things for 5 cents. All right. Like it's crazy. All they do is label it. And then you can actually order from the companies, the producers at Alibaba, and tell them what label you want on it. Okay. So anyway, tricky situation. I just wanted to bring that up because, yeah, that's a crazy situation that's happening right now that we have to keep an eye on. Alibaba, Skills, Corsair, BP, ConocoPhillips. So we got some oil companies out. Eli Lilly. Okay, yeah. Nikola. Oh my God. Did y'all see what happened with Nikola? Yo. The founder of Nikola, this dude got indicted. That's in the headlines on our news feed. Also, make sure y'all check it out. But this goes to tell you, Ron, where you at, Ron? Listen, Ron, you gotta have the laughing emojis right there. Y'all know we got emojis up in here. Y'all gotta be buzzing. Y'all gotta be bugging off of this. You feel me? So my man's here. He raising all this money on Wall Street. Nikola, you guys see that right there? Bingo. After Nikola Tesla, right? And so they have these cars. I think they're like hydrogen running. It's kind of like an alternative to Teslas, basically. And got these trucks. And so these trucks, everybody was hyped about it, and they're publicly traded. So again, the stock market, for y'all who took my course, here at Wallstreet Jackboyz, stock market is like a giant GoFundMe account, right? Except for you get, some benefits versus a GoFundMe account. But they come here to raise money, right? They come to stop. This guy here raising all kind of money in the stock market, got people hyped. So this genius goes and make commercials with the trucks. Now, mind you, they don't have any operating vehicles. They're just selling people on hopes and dreams about these cars running off of this hydrogen type of situation, but they don't have any vehicles that work. So what they do is they take these trucks down a hill, right? And they got the cameras out there recording it, you know what I'm saying? And they had the trucks just rolling down the damn hill. Just let them shits roll, just roll. And they shoot the commercial and make it look like they got trucks that's driving. Anyway, your man's got indicted, B. Yeah. That was crazy right there. He got indicted. It was, bro, like the shit that people do for money, man, like for the love of money, man, like it's just crazy. So now he got to pay for it. And trust and believe me, he ain't the first. He ain't the first in his line. We got a lot of shenanigans over here in the market. They're like criminals, they just get better, just like I said, my boys in prison, they get better, they figure out how to commit these crimes better. That's all. These rules and regulations don't stop nothing. So anyway, he just one of the ones who got caught. All right. Y'all dry tonight, man. Y'all ain't even rocking with me, man. Y'all ain't laughing. Y'all know that's funny. Lyft, they got their thing popping off on Tuesday as well. Wednesday, we got GM, we got Roku, Uber, Etsy, Kraft Heinz, CVS. So Wednesday look like it's going to be action packed. So I think we'll get some Lyft on Tuesday and Wednesday. That's where all the energy is going to be at. Just that you're working right. We got Thursday, Moderna. We got Square. Ron just posted in the news feed about Square acquiring a company. So we're going to take a look at those payment companies like Square, we're going to check the MasterCards, PayPal. We'll check all those companies out as well. Reset, you sold your Moderna. Hey, you got them profits, though. You ran off with the bag, though. That's all that matters. You feel me? So that's good. Viacom coming up, Cloudflare, Wayfair, Beyond Meat, Yeti, Zillow. So Thursday gonna be pretty tight too. Friday we got DraftKings. Who else looks good here? Kronos, AMC. All right, so that pretty much sums it up. So the bulk of the work is going to be concentrated, between Tuesday, Wednesday, and Thursday. So traders is going to be, doing what they do in between this time frame here. Friday is probably going to be, profit taking for sure. But the market's again still very distorted because you see in reality, but then you're trying to listen to what the feds are saying is transitory. So we have this, no real direction here in the markets right now. And then you got this Delta situation that's popping right now too, and everybody's waiting to see what that looks like. But anyway, you guys check out the rest of this work right here on the website, Wallstreetjackboyz.com. Anyway, they got this why vaccine makers could benefit from mandates. I'll put in there how obvious vaccine makers could benefit from mandates. No, they will. I mean, that's a fact. This is like just ridiculous. We saw the vaccine companies was moving, was at the beginning of the week, based off of, this whole Delta situation. I'm like, yeah, they about to try to cook up a whole booster shot now. They're going to come up with another shot, and then you're going to be on shot eternity. You're going to be in shot eternity. Oh, the regular vaccines don't work against this Delta stuff. And then once you get, Delta starts to go away, they're going to have to cook up, a foxtrot, and an echo and a foxtrot. Geez Louise, when does it end? All right, so I've done enough talking here. I know we are right here at the end. I'll take a look at a few stocks from you guys. So make sure y'all just drop the tickers that you have in the chat there. We'll take a look at those, do a quick analysis, and then we'll bring the session to a close. It's a lot of things I didn't get to cover today, but it's cool though. GDP numbers came out weaker than expected. I know that was 6.5%. Well below the 8.4% of what we're expecting. So that was big news also. And then Robinhood actually went public for those Robinhood lovers. And they went public under the name Hood. Okay. So you got everybody with the campaign saying, buy back the Hood. That doesn't mean buy this stock. So it's just named Hood after Robinhood. I don't even have my other book over here, but I'll give you guys a reference. It's in my other library. And in fact, you can actually download the Audible, which is actually better. In fact, I would recommend you to download the Audible. There's a book called Dark Pools. Dark Pools. A few of you guys have gotten that book from my recommendations in the past, but I'm going to go ahead and refer that to you guys also, especially you Robinhood traders who don't understand order flow and all this other stuff. Dark Pools, my man Chaim Bodek, and a whole bunch of other guys like Josh Levine and some big boys who actually created this whole, plumbing of the stock market as we know it today. And how order flow works and how they created all these algorithms. So these guys, bought the algorithms out. And in fact, Chaim had developed an algorithm killer. They call it the algo killer, So you have, guys who got these algorithm traders. You guys see it all over the YouTube when y'all are looking and saying, old ways of stock trading is dead. Go get the computers to do it for you. Well, y'all understand they got algos that hunt other algos. So there's nothing that's promised. I promise you, it's nothing that's promised. Anyway, but that's a good book. You guys can check that out. Listen to it. The audio book is actually great. You can just see like the way they describe it. Did an awesome job with describing. I felt like I was watching the movie actually while I was listening to it. But I got the physical copy as well. But just get the Audible and just listen to it while you cleaning up or you're in the gym working out, washing dishes, cleaning up and stuff like that. Cutting the grass. I know my man Ron out there. He out there cutting the grass and all that. Just listen to it. You know what I'm saying? So yeah. Anyway, this is what Robinhood did. Started at like $38, went up to 40, came back down. And we see they're trading down lower now here. So, their business model, y'all got to understand, is based off of selling order flow. So whatever you're doing on their website, they're selling it to the guys that Robinhood is supposed to be protecting you from, which again is just asinine. If you guys are on our email list and you've been reading the emails, any of y'all been reading the emails, send out a weekly email. And in the email list, I'll talk to you guys about fundamentals and technicals and stuff like that. I'll talk to you guys about in this past past two emails, we covered how basically even with the fundamental analysis, so much work that go into that. The big boys, they hire professionals to do all of that. And we can see their imprint in the market. So we're looking at the order flow. We're looking at the flow. What I'm calling out in the chat room every day on the website, I'm showing you guys where the institutional money is at, the big boys, because they move the stocks. We're too small to move the stocks. So we can see what they're moving. And so you want to ride with the sharks. You don't want to swim against the sharks and go into the shark mouth. We just riding with the sharks. You feel me? So I know the Reddit traders out there trying to destroy companies or whatever. That's a battle that they're just not going to win. So anyway, just swim with the sharks, because when the sharks eat the little scraps, they're small enough and they're big enough for you. You feel me? So the little debris you can eat from that. You feel me? That's my whole mentality behind that. All right. So Ron, what my man Ron got in here? All right. So Brunswick, BC. Yes, this actually looks positive here. Swing from this high down to this low. We can see the stock perform well down here against that support. Okay, and it's actually breaking out from that range. It was range bound in there, starting to break out from that range. We do have a squeeze that's sitting here. It's a long squeeze. I hate long squeezes, but we can at least get up to the 618 level on this one here. At least should be able to get there. Looks like they had a good earnings as well, so that looks positive. What else we got? FISV. All right. I don't know how you're feeling on this one here, Ron, but we can see, again, this right here is the resistance zone that it just pierced through. It just broke out above the resistance and now starting to settle where we're basically need to gauge to see if this is going to be the floor, the new floor as it comes down. But it could be forming a flag here. Still a little too early for me to tell anything on it. Except for the fact that it is in a bullish trend. The new trend is bullish. Okay, we got higher highs and lower highs, and it's breaking out, above this key level of resistance. So overall, I'm bullish on it. Bull flag. Okay, that's what I was figuring. So that's what you typically see, is that they'll form like a bull flag up in here, come like this, and then you'll see it, kind of consolidate a little bit, squeeze up in there, little tight squeezes back and forth, and then you get a nice breakout. So. All right. Anybody else got anything else you want to take a look at before we bring the session to a close? I know we did get some activity on Zoom this past week. And again, I was telling you guys about Zoom, if this whole Delta lockdown situation, go forward, Zoom will, be a beneficiary of that. And we can see how that's performing here as well. Again, that resistance zone right here. Stock just broke above, starting to come back down. Now we can see it here. Momentum came up, now starting to shift down a little bit. Want to see if it's going to keep that resistance level that it just popped through as a floor. So if this price holds above that, almost like a cup and handle here, Ron. Ron is the cup and handle lord here. You guys understand that? You got a cup, you got a handle up in here. So that's really an interesting situation, almost like a salsa and handle. Yeah. But overall, it's actually looking pretty bullish. So again, if Delta situation get worse, Zoom, I'll be looking at plays like Zoom and Avid coming up as well. Here's Avid. Y'all know when we do the editing, we use Pro Tools. Pro Tools is owned by Avid. So people with the sound design stuff. I was trying to reach out to my old producer friends like, hey, you should invest in Avid, because we all in the music industry, we use Pro Tools. And I think when I was telling them that Pro Tools was in this squeeze right here, it's on my Facebook page, which I'm banned from Facebook again. Y'all know how that goes, the Facebook, fascist book. But anyway, look at that. It was what, $20-some back then, and now it's up. And I was like, yeah, you might as well, own it. We use this when we're doing our music stuff. So anyway, it's continuing doing what it does. Had a fall back here to the 50, held the 50, moving up right into the 618. Does have earnings coming up. Nice squeeze that's up in there as well. Seeing momentum starting to shift up towards earnings. So we're interested to see how that plays out. So I think earnings is this week. Okay. And then, Ron is coming in with the shorts. And the bears definitely have been eating here lately. So, and for the record, okay, when the bears are eating, you don't have to go high. Okay, we're still in the chat room live every day, man in the markets. Okay, so make sure y'all show up on the website in the chat room right here. Okay, y'all just come to the website, just click this little chat bubble. It'll be a little chat bubble like that. You can see it like that, right? So you come in here, you go to the website, wallstreetjackboyz.com, create your profile. Once you create your profile, you log in, and you'll see this little bubble right there. Well, that's what we get in live 24/7. So you want to know what's going on in real time in the markets. In the real classroom, after the classroom, you got to be in the markets, okay? This is how you learn. We don't advocate following other people. That is not a strategy for success, all right? You can actually stretch this thing out and stuff like that, you know, to make it bigger and smaller. Y'all probably didn't even know that. All right. And then you just jump right in here in the chat room and you can see how we living over here. So 24/7 chat room is free for you guys to use. Everybody else charges $300 a month to use theirs. Now it's free for our users. So definitely take advantage of it. And again, during the day, we're chopping up the markets, but we cut up, you know, especially at the end of the day, y'all know, we cut up, we talk our trash in there. Feel free to speak. You know, I'm the Zuckerberg over here. So you got to really, really violate me really hard to get banned. And that hasn't happened yet. Only one person's on the line and he was a family member. You know how family does. So, but, you know, I got tough skin. So anyway, y'all chop it up with us in the chat room there. But yeah, so here's, again, this play here, Affirm. Ron is calling out a short on this one here. You can see it come down to like this $50 support zone right here. So you can see the symbols are in there for you. Cool. All right. So with that being said, man, we'll bring the session to a close. I appreciate you guys joining us this week. And we'll see you in the chat room tomorrow, man. Y'all have a good night. Peace.